What's up, swing trader? Snacks here. We've got a quick swing report here for September 11th. We've got a lot going on today. Okay, we had a political assassination in the US last night after hours, and then we also have some pretty major eco events in the last 2 days. Yesterday was PPI, today is CPI. PPI came in lower than expectations, got a nice push in the market. A little bit of a mixed bag, right? A lot of things popped up, sold off for the day. I think people were waiting to see today's numbers. So look, we're not gonna press too hard, right? We're in a few positions. We've got some exposure. We are, structurally still looking good to the market. I would say there's a slight negative divergence as we push higher here on the SPY, but the equally weighted is just pulling back a bit the last few days. So a slight negative divergence there that is worth keeping an eye on. But I think today's CPI report is going to be sort of the deciding factor of what we do moving into the Fed policy rate decision next week, okay? Which, if we get a good report, more so a good reaction out of the CPI report today, I think we push up into that rate decision, which I think everybody can agree now. We're probably gonna get a rate cut, right? Probably 50 basis points, and that sounds good, right? It will very likely, historically tells us it will likely be good over the next 6 to 18 months, but who knows what the reaction will be immediately following. And I do maybe expect, because of the push going into it, if that is what we get, I maybe do expect a sell the news event. So I will not be holding much at all going into that, but I will look to position off of the reaction from it. Okay, so we're just gonna keep an open mind here, but anyone looking for triple R setup, we want a strong company in a trend backed by growing fundamentals, and we look for a retracement, a reaction at around our level, remount of the short term, place a 2-to-1, and this is the first triple R setup that we are getting here on Celsius since earnings. So I'm watching it, right? Over the 9 is worth a look. Dave, so we got a retracement, reaction at around our level, and a remount of the 50 would be a trigger for me here on Dave on something that does like to get squeezy. And Hims has the exact same look as Dave, right? So you get a retracement, reaction at around our level, remount of the 50 here, I think has a much better risk reward than when we were really extended up into it. I'm glad that it did stall out just a little bit here, and we can now tighten up our stop. I like the trade. It's much more attractive to me now where it currently is on another one that does have a history of getting quite squeezy. Okay, and DraftKings, we've been watching this the last few days. I'm looking for a box breakout setup here that I could possibly anticipate with the quarter size position, and then let it break out of the box, come back, retest it, and push higher, and I would load up in that zone to full size. But when you see something consolidate for 6 or more months, right, in a big zone, breaking out of it can typically be very strong. And a lot of times you will see the price range repeat coming out of that zone. So where this was a 71% zone, a lot of times you will see that coming out of the zone, you will see it repeat. And look at any of the leaders that consolidated for 6 months or more up to multiple years. When it finally breaks out of that, watch how often that zone repeats, up and to the right would be one way to put it. And MP is the last one that I do like currently, where it's sitting, right? So we're getting a strong company in a trend backed by growing fundamentals, right? And we're getting our first major retracement, and we're looking for a reaction at or around our level, remount of the short term. MP does look attractive to me here where it is. But guys, I'm pretty set on where I am with my risk profile currently. I'm probably just going to ride my positions out, manage. If we have to sell them today off of a bad CPI report and the market looks a little bit dumpy, then we'll probably sell most of them for like slight profits, and I'll probably sit through the reaction of the Fed policy update coming next week. So we're not going to push too hard right now. The markets have been a little bit choppy on us. They are trending higher, which is why I've been taking positions, right? We are still, every dip has been getting bought. Structurally, we are fine here. I would say, as I did earlier, there's a slight negative divergence. So there's some caution out there. I'd say risk profile B-, managed positions is where I'm at right now, not really looking to add anything more. Let's see how we set up next week coming out of the Fed rate decision, and we'll go from there. And guys, if you're struggling in these markets, consider joining my 60-day boot camp, where I lean over your shoulder for 60 days and teach you everything I have learned in the last 10 years of trading these markets. I'm up over 180% on the year, on track to do over 200% this year. Okay, tripling the account in 1 year using simple structure, continuous continuation patterns. If you've been following these watch lists, I think you can pretty quickly see what I like to trade, right? I like to trade strong companies in a trend backed by growing fundamentals. We let them retrace, react at or around our levels, remount. That is my bread and butter, and I've got a few other variants of continuation patterns. Some are shake and goes, gap down reversals, box breakouts, IPO cycle, and I also do have a narrative play where we have a little bit of fun and we speculate, but we still do it within structure. We don't just guess or buy into stories, okay? We do look for identifiers even with our narrative plays, but we do get pretty big trades out of those when they hit. Guys, look, consider it. If you're spinning your tires in these markets, the market is a brutal teacher. You need a mentor, all right? And I'm only charging $250 for my pilot, and I will keep the price at $250 until October, where I double it, and I will do for each following boot camp until we reach 5,000. So get it while you can, get it while I am still new to all of this, right? I don't have a big following. I don't really care about following. My reason for doing these boot camps is because I would like to grow my inner circle. I want people around me that see the markets the way that I see them, that I can communicate with. The markets are a lonely place, okay? I sit here alone with my charts, and I have something of value. I have an edge that I understand how to articulate, teach, and share. So I've chosen to do this boot camp as my way of bringing people into my circle, teaching them my ways, teaching them my models, and we're all gonna make some money together, okay? But more importantly than that, I also teach you proper risk management and make you stick to a risk profile that you submit to me day 2 of boot camp. And that is something that we refer to often, right? And so not only are we gonna learn to make money with these models, but how to keep it and compound it over time, guys, through proper risk management. And that is the name of the game. Really more important than any of the models, okay? There's dozens of models that work, hundreds probably, you know, of ways to trade these markets. But if you don't manage your risk, you're gonna get slapped up, okay? That is just how the market works. As I said, the market is a brutal teacher. So leverage someone like me or myself, join my boot camp. The link and info is below. All right, guys, let's make some money. Stay safe and manage your risk.